Hey guys, and welcome to this new trade breakdown that happened on gold and that we got a 1:7 risk reward ratio. So in this video I'm gonna break it down from A to Z, so let's take a look at this. Okay guys, so to do this breakdown, it's quite simple. We all know that this is a sell, and if we go on the 4 hour on gold, we can see that it's incredibly bullish. So we're pushing to the upside. So now you will tell me, why are you looking for a sell when the momentum is clearly bullish? So let me explain it right now. So first things first, for my strategy, I have two different things I can do. I can be following the trend. So in this case, I would be looking for some buys, and I can as well look for some counter trends, but with lower risk. So this means as counter trends are more risky, to compensate for the risk, I will be using a lower risk, but the trade ideas are still good. So first of all, let's identify our overall structure, and then we're going to identify our counter trend structure, and I'm going to explain you how I managed to catch this trade. So first things first, we need to understand where is our overall structure. So our overall structure is clearly bullish, as you can see right here. So if I delete everything, we can see that we are pushing to the upside multiple times exactly right here. And the last break of structure happened here. So our last trading range that was bullish was from this low to this high. However, as you can see right here, if I go back in time before the trade happened, we had some bearish momentum back again. So as you can see right here, we broke structure to the downside, and right here we broke structure to the downside again. I personally identify my break of structures from a body closure to another body closure. So this is why right here I don't include wicks. So as you can see, even if we had this bullish momentum, I started to notice that we had some bearish momentum into the pullback. However, this bearish momentum is not confirmed the bearish reversal, because this might only be a liquidity sweep. This is why it's still considered a counter trend. If, for example, price would have break this low right here and continue to push to the downside, then I would change my bias to bearish. But only one break of structure right here can only be, for example, there a liquidity sweep before pushing to the upside. That's why I can still look for sells, but there would be counter trend. So as you can see right here, we indeed broke structure to the downside. So technically our range shift like this, and then our range shift like this again. So we were identifying our structure between this high and this low. Now you will tell me again, but your range is bullish overall, like you're bullish, so why looking for counter trends? And this is exactly what I explained. You can start looking for counter trends even if the overall bias is still bullish, but with lower risk. And as this is our current trading range, we can look for some sells. So I identified, after identifying my last break of structure, my Fibonacci from the high to the low, this time wicks included. So this is exactly my Fibonacci retracement, and after identifying my trading range and my Fibonacci retracement, so my premium and discount area, so above 0.5 it's premium, below 0.5 is discount, I will be identifying my valid points of interest. So exactly right here, I have this valid point of interest according to my strategy. So this is the opposite color candle before a push down that created an imbalance in price. And except for that, on the 4 hour, there is nothing else. So I will be going on the 1 hour. On the 1 hour, I have as well this point of interest that is a little bit higher, so bam. And except for that, I have nothing else. So now, as I identified my higher time frame points of interest on the 4 hour and on the 1 hour, I will be waiting for the POI mitigation and then for a 15-minute break of structure. So bam, price tapped into, first of all, the 4 hour POI and then tapped into the 1 hour POI. So let's see if we created any break of structures. First of all, when price stopped right here, then nothing got broken. As you can see, we never broke through a low here, we never broke through a low here, so we don't have a break of structure yet. So this means that we need to wait that this low is broken, as this is the last high that got broken. So this is our trading range to have a change of character / break of structure to the downside. So as you can see right here, bam, this break of structure happened exactly right here. Like I explained, I identify my break of structure from a body closure to another body closure. So as you can see right here, this body closure closed below this one. So for my strategy, this is a valid break of structure. So as we got our confirmation now on the 15-minute, so we have this break of structure, we can do the same thing. So we can take our Fibonacci from the high to the low, and now we're gonna identify all valid POIs on the 15-minute, 5-minute, and 1-minute. On the 15-minute, in this case, there is nothing, so I'm gonna scale down into the 1-minute. Then I identify right here this 5-minute POI, as you can see right here. And as you can see right here, when this 5-minute POI got identified, so let me go back a little bit of time, this is what we saw. So identify my 5-minute POI, again, above the 0.5, because below the 0.5, it's too cheap. So basically, I cannot sell when it's so cheap right here. I want to sell at the most expensive price, so it needs to be in the premium area, so above the 0.5 of the Fibonacci. Except for this 5-minute POI, we don't have anything else, so we can scale down into the 1-minute. And into the 1-minute, I have right here, exactly, bam, bam, 1-minute POI, another one on top. So now I have two POIs. The most extreme POI that is right here, I can straight away place my limit order for a sell right here, with my stop loss above the high on the 15 minutes and targeting the hourly low for my take profit final. So this is how it will look like. You see, huge risk-reward ratio trade. But at any other POIs that are not the most extreme one, I'm gonna place an alert. And if, for example, price stops into a POI that is not the most extreme one, I will be waiting for a 1-minute break of structure before entering at a new POI. So let's see what happens. Bam, this POI got tapped in before the most extreme one. So I can go on the right here on the 1-minute and see if we created indeed a break of structure on the 1-minute. In this case, we indeed created a break of structure on the 1-minute right here. However, if you notice, there's something wrong about this break of structure, and it's the range. Because if we just go a little bit on the left, we will see that the last break to the downside happened here, and this is not any valid pullback, because for me, a valid pullback needs to be minimum 2 candlesticks that push into the upside. As you can see right here, we only have 1, 1, 1, and that's it. So this was our last range, and when price broke structure, this means that this is our current trading range. So we actually need to break this low to consider a break of structure, and note this one, like a lot of people are making the mistake. And as you can see, later on price is just consolidating, and bam, we broke through a low exactly right here. So this is perfect, as you can see. However, now we have another thing that we need to be careful about, and this other thing is that we don't have any valid POI to look for an entry. So if, for example, after the 1-minute break of structure, we don't have any valid POI to look for an entry, either on the 15-minute, on the 5-minute, or on the 1-minute, you will be ignoring this and you will be waiting for another POI mitigation, and that's it. Because if, for example, we have this, right, and no POIs are available to enter, we won't enter, because that doesn't make sense to enter where there is no opportunity. So instead, we will just be waiting a little bit, and we will be just following the price action to find another entry. So you place this again, and bam, now this is right here your new Fibonacci. So you can identify new POIs while price pushes down, because of course new POIs will be identified. And in this case, let's go on the 1-minute to see what's going on. So 1 minute, there is nothing. Here, there is nothing, nothing. We do have a 5-minute POI that is still right here. So this 5-minute POI can be identified right here. And except for that, on the 15 minutes, we have nothing else. So same thing, we'll just be waiting. And you see right here, it's just dropping. It's fine. We don't do anything. We're just waiting. Same thing, we're going to identify new POIs if we have some. Of course, always above the 0.5. And here, same thing. There's nothing new. So we just wait. If there is nothing to do, we just wait. So again, price pushed a little bit more down. So same thing. Let's see if now there is something new. And as you can see right here, same thing, 1 minute, there is nothing. 5 minutes, there is nothing. And let's go on the 15 minutes and still nothing. But let's continue, as you can see right here. So same thing, we're just waiting. Okay, price pushed a bit more down. And let's see what happens. Bam! We have this 15-minute POI that is now valid. So we can repeat our steps. So if this POI is mitigated, we can wait for a 1-minute break of structure and wait for an entry. So as exactly right here, this is happening. So we broke structure to the downside exactly right here, as you can see. So this is a valid body closure. Bam, body closure below this body closure. And in this case, we do have this POI on the 1 minute that is valid. So you're going to take your entry right here, stop loss above the high on the 1 minute, adding a little bit of pips right here in case price comes close to mitigated. And take profit 1 will be at 103 risk-reward ratio, and take profit final, like I said previously, will be at the hourly low. So let's see what happens next. So as you can see right here, price came close to tap into the POI multiple times but didn't. But we need to be patient. So bam, as you can see, after being patient, later on price came back into the POI and straight away after that pushed it down and hit all our take profits. So this was more of a more advanced trade, because usually, you know, I do the type of trades that we take the most extreme POI and that's it. But sometimes you need to follow the price action, and this is just a more advanced setup. So if you have any questions, don't hesitate to just ask them in the comments. And if not, I really recommend you to subscribe to FundedNext YouTube channel, like and share this video to your other trader friends, and then see you soon.